Hello, traders. Guten Tag, buenos dias, bon après-midi, all that good stuff, wherever you are. Thanks for joining me again. It is 8:02 a.m. Chicago time on Wednesday, the 24th of October, 2018. It is hump day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, overall, the allocation and sentiment is really mixed. Crude oil is making a bit of a comeback, trading at $67, near highs for the session. 67.02 is the high, up 0.87%. The Euro stocks took a bounce, up almost 1% or 30 points. The Euro is the laggard today, down, looks like 0.54%, trading at 114.55.5, and the British pound is at 129.56 following that. Gold has taken a bit of a drop today, but not much. Overall, just seeing a mix. Dow Jones is up, but the S&P is down. NASDAQ is down. NASDAQ was down quite a bit at some point. NASDAQ is flat now. So the NASI is about 90 points from its low currently, from its session low. So a bit of a bounce there. So the overnight session, I'll show you in a minute, but the overnight session is definitely interesting. Has pushed down quite a bit in the S&P and has made a really good recovery. So we'll look at that in a minute. As far as what is on deck for today, we just got the FHFA house price index for August, expecting 0.3%. Not a high tier number. But at 9:45 Eastern, we get PMI services prelim. This is the market number. The expectations for 54 for October. We also get the Bank of Canada decision at 10. We get new home sales, the prelim number for September at 10 as well, expecting 625 there. And then we have crude oil inventories expecting 3 million surplus, distillates 2 million draw, and gasoline 1.54 million draw. We'll see how that goes. We still have a parade of Fed speakers. Last night we had Fed Speaker George. At 11:30 today, we get Bullard. At 1, we get Bostic. At 1:10, we get Mester. And then we get Beige Book at 2. So pretty kind of well-distributed calendar today. Let's take a look at what we expected yesterday versus what we got. We got all three scenarios yesterday. We ended up just slipping through 2,700. If you recall, 2,693 was a key area here. That's the composite low volume node right there, and it bounced back up, and then we went from scenario 1, which we can take off, to scenario 3, expected a gap zone even if it starts to become responsive. So essentially what we had was scenario 3 that dug a little deep, and then it ended up pushing back up into the prior range. Here's what things looked like. Very busy session. Very surprising to a lot of people, I guess. The volume was twice the mode of volume. Usually we get 1.1 million contracts in a session, and we got 2.23, so almost exactly double. And so here's what we did. We pushed right into that composite. Well, actually, this is a better chart to show it in. Right here. So we pushed right into that composite low volume node right here. Drop right in there. I've found that it was a fairly easy read. I'm not taking shots at anybody who struggled yesterday. In fact, yesterday was kind of day that usually spurs me to post the Trader Wisdom video on taking losses, because from the looks of it, a lot of folks just were hanging on or hung on to shorts and ended up being a part of the short squeeze. The market ended up extending the range up, breaking the IB high, extending the range up, and just unable to get back to the mid. A lot of strength there. And it just blew right through a whole bunch of different stock zones, which indicates to me that a higher time frame was in action, and they weren't interested in day time frame levels. So that's just a piece of the puzzle that we take with us. Here's what it looked like on Bookmap, the heat map overnight at least. Here's what things look like overnight. We reopen. This is the reopen for me, 5 p.m. Central Time. We go sideways for a good portion of it. We pop up. Look at the liquidity pool up here. I mean, this liquidity was there from the open, but then as we push up, you can see it kind of disappearing. And it could have continued higher, but ultimately it ended up bouncing for a bit. The European Open was right here, and then the market just sold off all the way down to the low that we have overnight, which is 27.19 or so. And then we rallied straight up from there. Just a very active overnight session. The overall pattern, it seems currently, is to buy the dips. This is the old, beach ball being pushed underwater and just popping back up. It appears to me, based on yesterday's action, that we did finally extend that sell-off that we had a couple weeks ago. As I talked about yesterday, in fact, let's look at that for a moment before I get into I'm kind of doing things backwards today, but let's lose these lines. All right, so we had the impulse down, market flagged, and then we had the extension, and then the extension ended up closing right back up. And this looks to me like an excess low in the 2700 area, and it has pulled back. To me, it looks like it may flag out today and then start to walk its way back towards the balance area up top. So the pattern for an impulse generally is impulse, pull back, consolidate, continuation, and then depending on how the continuation finishes, if it finishes back up, generally it consolidates and it starts to walk itself back and it becomes a correction. And what you have here is an inverted head and shoulders type of formation. I'm not a pattern trader, but we had some significant strength yesterday. We have not had a 60-point up move in quite some time. We've had them on the downside quite a bit, and the tendency statistically, and I believe I tested it yesterday, over 843 days of a 60-day plus positive day. And again, these are statistics, so past performance is not necessarily indicative of future results, but the statistics are over the last 843 days, going back to July 2015. That's a big enough sample. I filtered out for positive 60-point plus range days like we had yesterday, 60-point range days, and I looked at and so I found 8 days, which is a very small sample size in this data set. The data set's large, but the proportion of days that match that is only 8, and 7 out of the 8 days ended up pushing higher the following day, following a 60-point plus day. pushing higher with an average higher high of about, what did I say? I think it's 17 points or something like that. Nope, average higher high of 27 points the next day. So just, that's a raw statistic. It's not filtering out for anything. Just take it with a grain of salt. But yesterday matched that description. Okay. So that's that. So that's the big picture. So what did we do overnight? As I talked about, we have pushed down. We consolidated. We pushed down, and we found our buyers again, and we've pushed back up. We have a double distribution profile. Okay, and we have a little under 4 times the normal volume or the mode of volume for the overnight session. So it's quite an active session, quite a bit going on in Europe, of course, that's causing this to kind of bounce around in the overnight session. European PMI manufacturing data misses expectations. Germany and Eurozone new orders components contracts for the first time in almost 4 years. And then there's still stuff going on with Italy, Brexit. That's a lot on the news wire on that. And things are kind of shifting around. Yesterday, President Trump announced reiterated that there will be a 10% middle income personal tax break of that would be somehow, I don't know how, that would be revenue neutral. That's expected to come into play over the next couple of weeks, just in time for the elections. So that's a boost to the economy. Taxes are a drag on earnings and drag on sales and things like that. More money available to people is stimulating to the economy. Today, what are we looking at today? So we're opening just below the close yesterday. We're still inside. This profile is really baffling from yesterday. We have what looks like a lower distribution and a tight upper distribution. Okay, and a clear low volume node here at 27.3750. We have the 27.27 right here. 27.27 down here is the MC point of control. It's below us. There's a little bit of there's a fair amount of support beneath us. And so we're looking at the strong potential today of an open auction that is likely to start to retrace back down, pull back down, and potentially push into this 27.28 area, the point of control, before we see an impulse up. And then I'm expecting it to push through the 27.50 overnight high and then start working its way back up into balance at 27.60. That's the primary scenario. So I'm looking for any drops below to start pushing back up. Secondary market opens, it goes to yesterday's close, pushes up into the weak high that we left behind yesterday, gets back in there, and then we get the impulse down. The impulse down in this situation is likely to push people out all the way down into this 27.23 area. Those are the two key scenarios that I'm looking at for today. As always, you don't just bet blind. I don't put, for initiating or opening trades, I do not use limit orders. I do not put trades at my stock zone or orders at my stock zones and expect the market to somehow fill me and just turn. I'm using order flow in the form of the heat map. Very important to me. I want to trade against the liquidity pool wherever I can find it. Convergent members who want to understand what a liquidity pool is and how this whole thing works, take a look at the webinar in the recent webinar section for members that shows the advanced techniques for Bookmap. And then I use the volume scope, which is right here, the volume scope to read the action as it's happening. So I want to see that the market is having a hard time. In order to sell, I want to see that the market's having a hard time gaining price while it's lifting. I want to see price not cooperating before, getting absorbed before the turn. And then I'm trying to get in at the turn to minimize my price risk. Okay. Good luck today, and I will catch you tomorrow morning. Take care. Bye.